Hello guys, in this video I'll give you the cheat code on how to analyze Volatility Index 25 1S. Alright, that comes under the asset class of synthetic indices, or VIX, that most people might know it as. So normally, before I go down to my entry time frame, I normally do an analysis starting from the daily time frame. So I enter on the 5-minute time frame once it is aligned with the M15 and also other higher time frame that are a part of my trading plan. Alright, so here we have price action on the daily time frame. Alright, so if you look, you'll see 24 right here, daily time frame. Alright, and I normally use my direction tool. Alright, so price created a low right here, lower high, lower low, lower high, after it broke this level right here. So let's take a look on what's happening. So for persons who have not yet mastered price action or how to study the trend, let's call this our lower high right here. Let's put this in red. That's our lower high, and then we have a lower high right here as well. And what we're going to do is to also identify our lower lows. Alright, so let me put low right here. Alright, for clarification purposes, and we made a lower low down here because this low is lower than this low. Alright, so this is just a little bit a lesson for the persons who are new to this. Alright, so how do we know that the daily time frame is in a bearish trend? Let's look at the most recent break that occurred down here. Alright, so this lower low, alright, so this is broken by this black bearish candle. If you notice, that candle broke and closed below this point right here. So this is a confirmed break of structure to the downside. Alright, so I normally put this as break of structure. A lot of people call it different names. Feel free. This is the terminologies that I use, so this is what works for me. Alright, so once you establish the break of structure here, where is the highest point between the level that was broken and the level that broke the point right here? So the highest point is here. Alright, so that's the highest point, and I normally color code so that I can know the different time frames. So that is the highest point. It is not right here, guys. This is not the swing point right here. It's the highest point. So once you're bearish, it's the highest point between the level that was broken and what broke the level, and that point is right here. So if price should remain bearish, it needs to stay below this line, right? So if we have something like this and price travels up and breaks and close above this line, we are no longer bearish on the daily time frame, we are now bullish. Alright, so that's basically the case. And what I also do is I mark out my most extreme candle, and I refer to that as my supply zone. Other people do it different, but you can do it how you want to do it. This is what works for me throughout my back testing. Alright, let's go on the 4-hour time frame, see what's going on. Alright, so the 4-hour time frame gives us a little bit more detail in this price movement. So I started on the daily. Now I'm on the 4-hour. What this process does it narrows down your focus to the entry time frame while aligning the price action so that you don't enter non-probabilistic trades or trades that will make you lose money. All right, so for the H4, if you notice, when we were traveling down from here, lower high, lower low, this lower high got broken right here. So this got broken. So now we're tracking the 4 hour. This got broken right here. Came here. Pull back. Right, so it's obviously H4 is actually bearish. So what we're gonna do is to identify the last point that got broken on the H4. Alright, which is this. So that's a BO breaker structure for the H4. And I put my H4 in blue. Alright, just for color coding purposes. And I also identify the highest point on the H4. This is what I use to keep track, to know when the different time frames either switch trend or has completed their pullback or retracement. Alright, so what's nice about this, guys, is that the H4 supply zone is embedded within the daily supply zone. Right, so our zones are kind of stacked in this one. So top-down analysis, that's what we're doing. All right, so now we're focusing within this range. So we're in this range right now. So H4 range right here, that's where we are in there. And this is so that we can narrow down the price action so that we're not all over the place. Right, so if this is the case now, guys, when it reaches down to the H1 time frame, I normally use the fractal marks or the fractal price action within the H4 to identify the H1 trends or ranges. So for example, on the H4 right here, we were coming down here, pull back, broke. Now this little point right here on the H4, that's my potential 1 hour lower high. Now let's look at the 1 hour time frame and see how this looks. Alright, so now that we see it, it's a massive range on the 1 hour time frame. So now we can say that level broke this point right here for the 1 hour. So my 1 hour is in red. Alright, so I put that in red. And remember, guys, every color has its own significance. Alright, I've been doing it for a while, so I know what these colors mean. So you just have to find what works for you. Then I mark out the most extreme candlestick. And since we are bearish on the 1 hour, that extreme candle is going to be my supply zone. And now the focus is now narrowed down to this range right here. So if you notice, we are coming all the way from the daily time frame, and now we're down to the 1 hour time frame. So now that our focus is narrowed down to the 1 hour, we are focusing to see what happens within this range, because we're coming down like this on the 1 hour, retraced, then pushed lower, and you have a slight pullback right here, but we don't know what this is going to do as yet. So let's watch this. All right, so that's basically how we narrow things down. And just to push things forward a little bit until price plays out, if we consider this H1 supply zone, as a zone that we want to trade from. This is what I would want to see. All right, so pay attention to these little micro moves within the H1 swing. All right, micro moves, pushed, had a slight pullback, push. So what I want to see is this, guys. If the 1 hour is retracing, this is what I want to see. Slight push. I want to see micro pullbacks within the 1 hour retracement. Micro pullbacks. Doesn't have to be big, micro pullbacks. So what normally happens is this. These little micro pullbacks on the 1 hour retracement, on the 15-minute time frame, those little pullbacks are full-blown 15-minute structural levels. All right, so let's say the 1 hour retrace is in this fashion. If we pay close attention, you'll realize that price keeps making higher highs and higher lows. So let's say we identify this as an M15 break that is facilitating the H1 pull retracement. So we'll track it, right? So we got a little break higher right here, and break higher here as well. So this is what I would want to see, the 1 hour retracing. And now when it comes down to the entry point, guys, this is extremely important because a lot of people see this and they say, whoa, price is now in the 1 hour supply zone, and then they put the sell order here, stop loss above the 1 hour zone, and then they put the take profit at that low. But what they fail to identify is this retracement that we just marked out, guys. This retracement right here, that is a bullish trend on a lower time frame. And guys, that is all you need for price to push against your entry. Cause even massive moves in the market, those massive moves starts with these little moves right here. So what we do in this case, or what I do, and guys, remember, whatever works for you, stick to it. You don't have to use what I use, because there are a lot of different strategies that actually work. This is just the one that I like. So now let's say we are here. We're going to track the retracement. Remember, guys, this zone right here that we are in, this range, is just the 1 hour range, and we are tracking what's happening in the 1 hour range. So the 1 hour broke structure over here, broke structure, but when structure is broken, normally it creates a pullback. All right, so this action right here, the retracement or the pullback for the 1 hour time frame, is normally a bullish trend on a smaller time frame. Guys, please make note, when the 1 hour time frame breaks to go lower, price normally changes bullish on a smaller time frame to facilitate the retracement. So while the retracement is being done, you're going to track these levels. You're going to track these higher lows. So each time price breaks a structure, creates a BOS, you're going to track these higher lows. And the most recent higher low is this one right here. So just imagine we entered right here on the edge of the 1 hour supply zone. Guys, look, this smaller time frame is a bullish trend that is pushing in the opposite direction of our entry. Guys, we need to be more conservative with the inches because the market can do whatever it wants to do. We don't know the market that well. So what I do is, once I'm tracking the most recent lower highs, let's say price creates another pullback. So pullback and creates a new break right here. Let's say price creates a new break or structure right here. I adjust my higher low. All right. And now that we are inside the H1 supply zone right here, I'm expecting two things to happen. It's either price can continue to create higher lows and higher highs and break the 1 hour extreme point, and then it's going to shift the 1 hour time frame from being bearish to bullish. So that can happen, guys. Always remember that we don't know the market like that. That can happen. So we can break the level and go bullish, or what can happen is price can break this most recent higher low, and close here. So if price does this, guys, so price broke and closed below the most recent higher low, and for the break we want to see a candle. Let's say, right, we want to see a candle break and close below this level. All right, that's what we want to see to confirm it's a solid break. We don't use the wick. If it's a wick, it can be a liquidity sweep for price to push higher. So it can be a sell side liquidity sweep for price to push higher. So once we see a break below this level right here, what we're going to do is this. We're going to now focus on a new range. So now we can move this line and put it at the top, and then we establish our market structure shift for that retracement. So now market structure shift, and listen up, guys, a lot of people use it. The terminology is different. Some say break of structure, some say market structure shift, some say change of character. Whatever works for you, stick to what works for you. So now that we are bearish, so now this retracement right here, this retracement has now shifted from bullish to a bearish trend. All right, and it is now also aligned with the 1 hour time frame that was already bearish. So now we are focusing on this range. All right, so that's the range that we are actually focusing on. Let me get these off. Or I can use the box. Now we're focusing on this range right here. All right, boom. The procedure remains the same, guys. Once there is a break below or above, price normally retrace. It might create a little bit of micro structure, but that's fine. And if I had identified my supply zone right here, all right, I would take my entry somewhere here, and in this case I can put my stop loss here, because, guys, this level is already broken. So based on my back testing, it's safe for me to put my stop loss below the extreme 1 hour high, and then I can aim for the next draw on liquidity at the most extreme. All right, so even when I was just starting out, a lot of times I would just enter on the 1 hour without looking on the micro moves that are pushing against my entry point. Guys, remember, there are millions of dollars also being spent or traded on the micro time frames, 1 minute, even the second time frames. So those trends are important. So if you see the 1 hour retracing, don't just enter blindly at a 1 hour supply zone. Just wait until the fractal or the micro structure gets broken, and then you enter on that retracement. And also it gives you a higher risk to reward ratio. So let's say we were entering on the 1 hour and we had our stop loss above and we aim for the same low. This gives us a 3.71 risk to reward. But if we waited on the confirmation for the smaller time frame to change structure, you'll realize that we are now at a 4.83, approximately 5 to 1 risk to reward ratio. So it does two things mainly, and I know that it does a lot more stuff, but two, it increases your risk to reward ratio. Alright, so in this case you can use a smaller lot size, but your profits can be bigger, and that's one. And two, it gives you more confirmation, so you're not just jumping in the trades blindly. It gives you a little bit more confirmation when multiple time frames are aligned. Alright, so that's basically what I wanted to break down in this video. If you like this type of content, please subscribe to the channel and like and leave your comments as well. So what's your trading style? What's your technique? What asset classes do you trade? And I'll see you in the next video.